Hey traders, Steven here with tradersplan.com. It is Friday, November the 5th. We're going to do what we always do on Fridays. We're going to look at the overall market, then we're going to look at some top ETFs of the week, some fresh ideas that are setting up. But let's start with the overall market right now. We are absolutely in melt up mode, right? So, you heard the market melt down. This is melting up, where you just really have an uptrend, and then it just starts to accelerate from the upside, and it gets really, really steep. Right now, the market is 6% above the 50-day moving average. Now, in a rally, or in kind of a strong rally, kind of that 6 to 7% range, you can kind of see right through here that this is about 6 to 7%, right? That is, normal in a stronger rally. What is not always normal is how quickly it gets up there, right? Like how steep it goes straight up. So I'm just going to continue to keep an eye on it. I've been saying really since back here, like, hey, you need to be long, right? As the market was breaking above the 50-day moving average, not knowing which way, it was going to go. Just know the market had a bullish tilt, and, I've definitely been long, and it's definitely been nice. So I think one mistake people can always make is just wanting to book profits too quickly, right? Just feeling like, hey, Steve said it's in melt up mode. I need to book profits quickly before it crashes, because it could crash, or it could just slightly pull back, right, and then continue its uptrend throughout the year. We don't know. That's why you need to have your exit rules ahead of time before you get into a stock, so you don't make emotional decisions. But it is getting a little steep. I do think it needs a pullback, but I thought it needed to pull back right here, and it hasn't even broke the 5-day moving average yet. And tech stocks, especially semiconductors, are just on a tear. So right here, you have the S&P 500. It looks exactly the same, right? It's not quite as steep, but it is accelerating to the upside, right? The 20 is above the 50, the 50 is above the 200. The market has stayed above the 5-day moving average since it broke above that level, the green line, since October 5th. So that looks pretty strong right there. And by the way, it always helps to expand this view to full screen, so that way you can see the charts really, really well. So let's go look at some ETFs. Okay, let's look at some ETFs right here, and let's rank it by the top ETFs of the week. Okay, and let's just kind of go down the list. So uranium, this, and I did buy some uranium stocks earlier this week. It looks pretty nice. It looks like a very, very strong uptrend. This is URNM. We're looking at the daily chart. Nice cup with handle pattern. It's probably got a little resistance right here, but it could, I would expect this resistance to, it's in an uptrend, so you have to expect resistance to get taken out. But, right here, I think that it's about, it's kind of getting extended, right? It's about 8% above the Wednesday's strong bar, right? We're about 8% above that level, and I think that's kind of where you need to have your stop at if you want to take this trade. So it's getting a little steep, right? But we'll kind of keep an eye on it. But, this right here looks good. It's kind of one of those high risk, high reward, right? If it breaks out, it could continue to get really, really strong, because this is kind of, in my opinion, the first consolidation of the move. Most breakouts from the first consolidation work really, really well. So I'm in a stock, not this ETF, but we'll just kind of wait and see. But this looks like it's about to pop. So if you felt like you had to get in, I probably wouldn't risk more than 8%. If it comes back down, so be it. This tech ETF, this is just kind of like a QQQ, so not very exciting. We'll kind of move on. So you have this Chile ETF right here, ECH, Chile ETF. So we have, this is still pretty ugly. One could say it's breaking out of a downtrend for whatever reason, but it's a pretty thin, it's not too thin actually. There's definitely volume coming in. I wonder if there's any news. I don't see any news related, but this is looking pretty good. I would more throw this on a watch list, right? Keep an eye on it. I just think there's better charts out there, because this is a downtrend. It is trying to break out, but most trend reversals fail. I probably need to see a little more before I would get excited about this. Block, B-L-O-K, blockchain, crypto has been strong. It's hard to argue. It broke out, really across 54 right here. Maybe it's a little extended. Maybe it'll pull back a little bit and kind of do this. So if it kind of pulls back around the 55 area, that might be a good entry, maybe closer to support. And if it pulls back and you want to take the more conservative route and see if it breaks back above 60, you could buy that with a stop under here. Okay, so it really kind of, because it's still in a deeper consolidation, but to me this looks pretty good. There's plenty of volume coming in on this. I would expect this. It's only a matter of time before this gets taken out. Semiconductor, this is looking really, really good, but it's also looking extended, right? Semiconductors are just the technology industry that are leading the charge right now, along with electric vehicles. But I mean, if you're looking within the NASDAQ, it's really semiconductors, NVIDIA, AMD, some other stocks. But I mean, this is just looking really, really strong. You had stocks like NVIDIA, this ETF alone, which is not that aggressive. It was up over 3% yesterday. NVIDIA stocks are up over 10%. So it's just, that, and I talked about one of these ETFs, I think it was XSD a couple weeks ago. And I said, this is looking good. Maybe it needs a pullback. And I think that was like right on this day, and it just never did. And that 100% happens, right? That 100% happens. Sometimes you wait on a pullback, and it might not ever happen, but over a reasonable number of trades, you want to buy as close to support as possible. So this right here, I would just really look at semiconductors because, they could make a multi-month, multi-year move. And right now we're just really 6 weeks in. So, wait for the pullback, be patient, don't get crazy. XBI, there's better stuff out there. But, it's funny because you got a lot of charts that look similar to this. Very, very aggressive ETFs like the solar ETF, like the iDrive ETF, like a lot of these very aggressive type stuff that really are trying to break out of this really bottoming pattern right here and have peaked at the beginning of February. So we'll see if this breaks out, but for now, I'd more just keep an eye on it and we'll kind of wait and see. But if this moves, like when you're in a market that looks pretty extended, when I'm looking for stuff, I got to look at stuff that's not extended. Okay, so I don't think, like uranium isn't quite extended, but semiconductors are. Biotech isn't extended, but it hasn't broke out yet. So we're kind of, looking for those ideas that are, have that potential to move quickly, have the potential to play catch up. So iDrive right here, obviously due to Tesla, that monster move, it's been fun. I'm not gonna lie, but it is looking like a very, very, very steep chart. So this would be one of those examples where, just like semiconductors, it is extended, it is melting up. Right? Don't let that FOMO, that fear of missing out, just take over your emotions. Right? We have to trade emotion less. Right, and just stick to a reasonable set of rules, and over a reasonable number of trades, you'll catch these. Okay, but this is looking really, really good. Right here, you have this Robo ETF that is also looking strong. Broke out, but I would still say this needs to kind of pull back under 70. I mean, this is a monster, but you remember I said, right? There's a lot of these mega growth. Right, that peaked in February that is now starting to wake up, right? And that's a long consolidation. So when these start to break out, I would take them very, very seriously because, like I heard a long time ago, the longer the base, the higher in space. So what that means is the longer the consolidation, the more validity. You got to give its breakout, all right? So really, those are the top 10. I would say a lot of these are getting a little steep, so we want to be careful. But uranium's probably still in buy range, but it is very volatile, so you want to have that stop in place, under Wednesday's moving average. But there is some resistance, right? It is knocking on resistance door, so we'll wait and see. But that is a beautiful cup with handle pattern. There are a couple other ETFs I want to really, really point out that are still on the watch list, right? That I am waiting for a pullback. One is this hydrogen ETF. More and more volume is coming into this. This is getting to be a hot sector. You know, when I really started to pay attention, it was right here, probably a little steep. Haven't got that pullback yet. Maybe we don't. I don't know. But, you know, I'm waiting for some kind of pullback and rebreak or some kind of retracement. But this is definitely something on my watch list. Very, very strong over the last, you know, since this rally started. It just is a very, very thin ETF. TAN. So this ETF is, let me kind of shrink this so you can kind of get a clear picture. So, you know, remember I said, look at all these ETFs that peaked in February right there and now are starting to wake up, right? You have this TAN ETF that already broke out. It really sold off. It sold off hard, right? And this looked pretty ugly. And now it's woke up. It's broke out of this bottoming pattern. One could call this an inverse head and shoulder, right? But either way, there's clear breakout there, and to me, this is probably pretty close to back to the buy range. Like it popped, had a nice reversal bar. It is 10% above the 200-day moving average, which is, I think, that's clear support to me. Now, if the market accelerates, you might not get there. So if it pops, you could always just buy it and just put a really tight stop under Wednesday's low of 93, right? And you're not giving yourself a lot of room, so just understand, right? The more wiggle room you have, like the higher the win ratio, but obviously the more risk, right? But this is looking pretty interesting, so you could always play this. If it breaks, you know, I guess you could buy it right here, but if it breaks out above, I think that's Friday's high, then you could, you know, just put your stop loss right here, okay? So that's still looking pretty interesting, and the only reason why I'm saying, hey, maybe consider buying it here or here versus waiting for a pullback, because you might not get that pullback as we have seen. But I still think it's pretty close to the buy range, but it could get extended. Another one that is starting to wake up that is not in the top 10 is PRNT, and that's the 3D printing. Same chart. Look, it's so interesting because a lot of these charts, they look exactly the same, right? They peaked in early February, and now they're all trying to wake up. So you have these very, very aggressive industries like 3D printing, right? Self-driving cars or electric vehicle cars, you know, hydrogen, solar, like uranium, very, very aggressive ETFs where you actually don't need to buy the individual stocks. The individual ETFs move enough on their own as it is. You can see right here, but are really, really getting interesting. So, you know, with something like this, clearly you could buy the breakout, right? Which we're about 2 to 3% away. You could easily buy that breakout and just kind of see what happens. But we also got to keep in mind, right? You could buy the breakout with a stop under the 50-day moving average. So that might be about 7% stop loss. We do got to keep in mind where the market is. So, yeah, I'm giving you ideas, right? In an ideal world, in my opinion, the market would pull back in some of the more aggressive names that have already popped, like semiconductors, and you know, some of the self-driving stuff that's looking stronger than 3D printing, right? Because this has not broken out yet. This has. So these are stronger. Obviously, the market likes these more, and the market is extended. So in ideal, the market pulls back a little bit, and these pull back and give everybody an opportunity. But sometimes that doesn't happen, so we have to play catch-up with some of the more aggressive ETFs like this. So there's plenty of things to watch right now. There's plenty of aggressive growth breaking out, right? Just kind of the summary, I would say, you know, pay attention to how much you're buying at this point in time. Like, what is a reasonable expectation given that, you know, the market is melting up, right? So just kind of keep that in mind.